story, what's going on in the market, the nitty gritty of it all is our banter. I guess that's where you guys come back, right?
You know, I think they come back just because of your best jokes ever.
Okay,
Like,
well, I don't know the
you
best
know,
jokes ever, but probably really good
and
jokes.
your stunner shades that you got going on today, you know, those are good.
My eyesight's been not the greatest with when I look at the computer too much. I'm spending my time too much on the computer.
So
I
they're
gotta.
blue blockers. These are actually blue blocking lenses too, which actually eliminates a lot of headache when you're looking at a computer screen all day. It's pretty, wears on you after a while.
Well, we're not here for basically our glasses knowledge. We're here basically about the San Diego real estate market, and if I guess let's get to the fun of it. I mean, we've been talking probably the last couple of months about September, and I think we talked about it last time we were on here that yes, the Fed basically can reduce how much it needs to be held, right? And that affects basically kind of the rates, projections based off of that. And because there's a high likelihood that the Fed in middle September, right, is going to reduce that number, we've been seeing interest rates go down pretty good. But talk about that. Why don't you take us away, David?
Take it away.
There we go. Exactly.
To take the bigger picture. So for those of you, you've been listening to economic information coming out. Continuous jobless claims are up once again by 13,000. They're at an all-time high of 1.868 million. That's the highest since 2021 in November. And then GDP did come out. It came out better than anticipated. It came out at 3% growth, which is better than the 2.8 anticipated. But GDP in the first quarter was only 1.4. So I mentioned that because more than likely that GDP of 3% is going to be revised back downwards because 1.4 to 3% is a big jump. And the big feeling that the Fed is looking at and going, hey, this is really affecting the labor market, it's affecting consumers, is the high expense of car loans, interest rates, home prices, car loans, any sort of thing of acquiring credit is very expensive right now. It's dragging the economy down. So when the Fed met at Jackson Hole the other week, they basically confirmed, they said, hey, inflation's under control. Don't worry, prices aren't going back down. In case you're wondering, they're going to stay the same. They're just not going to go up as fast. So they pretty much secured the point of we're going to lower rates and try and make the consumer better off. And they didn't say if it's going to be a quarter or half a point. So the interesting thing is this, like, if you look at all the last big events, the last time this stuff went on, which was the early 2000s, and then you had 2008, the major housing recession, and then you had another slowdown around 2015, and you look at all that together, most of the time when they do their first initial cut, they do 50 basis points. I don't know if they're going to do 50 basis points, but considering it's a gigantic election getting ready to go on, and, the Fed's impartial, they don't work with anybody, supposedly, but I'm thinking you may get a 50 basis point cut. If they do 25, that's pretty normal. That's going to be fine. That'll help the mortgage market a lot. But if you notice, if you talk to any lenders now, they'll already tell you rates have plummeted a lot. They've already come down, like literally, like it's almost like 75 basis points just off knowing that the Fed's going to cut. Then they also said they're going to cut 4 to 5 more times by the end of 2025.
Oh, wow.
So what does that mean? It means by the end of getting closer to the end of the year, 2025, I mean, you're probably going to look at average 30-year fix for, conventional cookie cutters, 0-point loans, everything, probably 5%. I'm estimating that. I mean,
what do you think? I mean, so VA right now, I mean, we're talking about what, mid fives, low fives, somewhere in that kind of ballpark for VA.
So if you look at VA and you're looking at loan amounts below 766,000, 0 points with a 740 FICO, I just did one this morning. It was at 5.25 APR at 0.125. But that's unheard of. Like if you start looking around on Mortgage News Daily, you'll see they're saying it's like 6.25. It's a lot higher. So it's going to depend right now with this market changing and going in the new direction. It's going to really matter like what lender you talk to, because their rate's going to be directly associated with their overhead. And what I mean by that is, are they a brick and mortar? Are they a bank? Are they a credit union? If they're a credit union, how long can they bleed money? If you're a retail lender, how much overhead they got to pay their managers, their HR, their brick and mortar building, all their stuff. So you're going to see a big disparity right now between lenders of different breeds. Sorry to go on, but it's an interesting time because, I mean, I locked loans this morning at 5.25 for a VA. That's unheard of.
Okay, now this is a question I don't think we ever talked about on the podcast. I'm curious of your opinion on this. If you're looking to actually see if you're getting the best rate by your lender, right? Because each lender, each broker, right? Different, like brick and mortar, like people that are taking in-house, like they're servicing the loan in-house, right? The rates could change, right? But for a broker, right, it's on who they have access to, and they probably most of them have access to different ones, but they're got to be kind of almost a detective a little bit to see what's going to be the best fit for you and kind of dive deeper. But there's also margins in each basically file, right? So if let's say you were looking to actually, before you send your documents over, before you get into the nitty gritty of it with the lender, how do you know that you have the right lender? Would you say you would shop it at the same time? Are there questions to ask? I mean, what's your perception on this?
So it's a great question, Vinny. And I'll tell you, first of all, if any lender tells you they have the lowest rates, they're lying. So just know that as a consumer, because rates change every day and lenders are going to tell you what you want to hear. So that's kind of sad. And then the lender that specifically may have the lowest rate in town today may not be that way tomorrow. And that loan may never close either. The lender may not be able to deliver the product. So in my opinion, when you're shopping for rates and lenders, you want to find a lender that has a good competitive price with everybody else that's not mispriced, because you're going to see a lot of mispricing right now. Like one lender may tell you, oh, my rate's 6.875, APR or whatever, 0.25. And another lender go, hey, the average rate today is around 6.375. That's probably about more average and correct. But there's a big difference between the two, because banks, retail lenders, brick and mortars, all those companies that have overhead are going to be more expensive.
Well, no. I know you're talking about basically generically and majority of the time, but there are some brick and mortars that, let's say, they're trying to get more of these files into their thing, right? And so they're going to actually reduce their numbers on that particular situation. So there are outlier situations too, right? Where if there's like a grant program that bank specifically has access to, right, that maybe other ones don't. So there are outlier situations, and I mean, I guess there could be generalities like you're talking about. Just want to throw that in there.
No, you're 100% correct. So just full disclosure, like Vinny said, there's going to be niche programs that certain banks will do that no other lender will do, and they're really good programs. And there will be other times where you'll find like one bank may want to get market share, so they'll reduce their profit margin down to next to nothing and offer a phenomenal deal. And if you get that, you should take it.
Yeah.
And if you talk to a lender that's honest, they should tell you, hey, you know what, that's a smoking deal. Go with the other person, or go with that credit union, or do that down payment program, because I don't have access to it. Because not everyone has the same things to every single product, but your good lenders are all going to have almost the same products. Give or take something very niche, like me and you talked about, certain down payment programs. Sometimes those are only specific areas. I mean, I really want to stress, you want to work with someone that's going to be knowledgeable, finish the loan, get you the house, not give you surprises, and give you a good competitive rate. It's unrealistic. If you're one of those people out there who goes, I have to have the lowest rate no matter what, you're probably going to work with someone in Iowa in the bottom of their basement. You may or may not close on the house, and you may or may not get the loan.
It's going to be easier to work with that person in Iowa in their basement, right? We're really not going to work in their basement. But anyways, it's going to be easier to do that in that scenario if you're refinance your property, right? True. Or cash out refi or something like that. But if you're buying the property, that's different.
You can gamble then. I mean,
yeah. And your time frames. You're not locked into time frames, right? Like you could. I mean, it only matters when you actually lock in your rate, right? If you're refinancing, there's not another side that's saying I got to get this done by X, Y, and day, right? But if you're buying a property, you got timelines in place, and you better talk to your realtor, because you could lose those time frames. You could lose the EMD, but you lose that property.
Yes.
So yeah,
you'll lose the house. It's like it's so important. You work with a good agent, work with a good lender. And for the market changing in the whole landscape, everyone out there, Working for the cheapest person doesn't ensure you're going to get the best service. You better know that, and you may lose that house of your dreams. So be careful who you work with.
All right. The real reason why people are here, they want to know who you have in the badminton Olympics.
Ooh, well, my number one is